Forex trading robots. What are they? How do they work? How are they made? And are they useful in the very end? Ladies and gentlemen, welcome to AfroSwing FX. Today I'll be discussing about Forex trading robots, otherwise known as expert advisors. If you log on to your MT4 or MT5, you will see something called EA. EA is an expert advisor or a Forex trading robot. So I'll start with what are they? So a Forex trading robot is a piece of software that analyzes the market for you and executes trades on your behalf. So that would be an automatic or automated expert advisor. There are other expert advisors or trading robots that analyze the market for you, but they do not execute your trades. So that is semi-automatic. Now, people prefer robots for various reasons. Number one would be they claim that robots remove the human error bit. They reduce a lot of emotional bias. They are very effective because they operate 24 hours a day, 5 days a week. As long as markets are open, robots will do what they're supposed to do. So there's a case why somebody should actually get a robot. So how are they made? So there are simple robots and then there are complex robots. So we'll start with simple robots. Simple robots, and I'll just use an example. So a simple robot is created by putting together some indicators and rules within the indicators that if this rule is met, buy. If this rule is met, exit out of the trade. If this rule is met, you sell. And that's very easy. And one platform where you can build a very simple robot is what you see on your screen, Expert Advisor Studio. It's free for the first 14 days. You can test run this thing, have fun with it. So right now I put together some indicators and I loaded onto the studio. I just used 3 indicators that come close to how I trade. And I used AUD USD. I used the daily time frame data. I used a micro lot of 0.01. I'll show you. And I used some 3 indicators and I told it just run for 4 minutes. Go back as far as 2000, I think 2008, what I see on my screen, and then give me the results to date. So this is a very simple robot, and I'll give you the results of this test. This is a very simple robot. Anybody could build it. But because anybody could build it, that's also the downside of this robot. You want a robot that is built by a trader who has experience and a track record. Not just anybody who can log on to Expert Advisor and throw together some indicators and come out with a robot and export it and sell it to you. Okay, you want something that is dependent on a track record of a trader. So now we go to complex robots, which are also known as algorithms. So an algorithm is developed by financial institutions. They will put together traders, finance specialists, economists, mathematicians, programmers, you name them. They will put all these professions together and tell them to come up with a robot that will give them an edge. Number one, financial institutions have no problem taking 6 months to develop a robot. They have no problem. And if they will take 6 months to develop a robot, you be sure they'll pay so much money for those professionals to put in their time. Then they have no problem putting another 6 months, even to 1 year, testing that robot before they deploy it in the open market. Now, algorithms are very expensive. And now you begin to understand the robot you can easily find for $10 to $20 is not necessarily going to give you an edge against financial institutions that have taken at least 1 year and thousands of dollars developing a robot. They will not give you an edge against these other guys. Now, these are the two distinctions between a simple robot that you can find anywhere, go to your MT4, MT5, go online, everybody selling a robot. And then there are algo robots that are developed through rigorous work and money is deployed into developing this robot. So how do they work? So for the simple robot like what is on your screen, I've given it three indicators, just three: accumulation, distribution, volumes, and the last one would be, I'll just check, we'll confirm. Momentum, sorry. So three: momentum, volumes, and accumulation, distribution. Please note, these are the only indicators I have picked that resemble how I trade. There are many other indicators out there, and I'll show you. So how do they work? And if we come to the expert advisor, and let's look at the results. It tells you the net profit is $996. Maximum daily loss is 71%. Sorry, maximum drawdown 15.18. It took how many trades? 27 trades. So it's telling you long entry. Open a long position at bar open when the rule below is satisfied, which is the rule accumulation distribution. So when the AD changes its direction upward, you do what? You get into a trade. How do you exit? Close a long position at bar open when the rule below is satisfied, when momentum crosses the level line upward. So it will take some rules by itself, and it will get into and out of trades. Same thing with short entry. Now let's see something that I want people to pay attention to. So this is how the robot has worked from 2008. Remember, it took data from 2008 onwards to 2024 September. And you're seeing we have very many good months, and then one or two bad months. But what is also interesting, I want you to look at, and this will form the basis of why robots fail. I want you to look at the drawdown. The highest drawdown was 15%. And in terms of currency, it was around $140. So you're seeing here is $140, and here is about 12%. Why am I showing you this drawdown in percentages? I will come back to something called the generator. The generator is what you just press and it goes ahead and does everything else. I want to show you something. So my account is $500, leverage is 1:400, and I'm using the leverage that I use in my country, 1:400. And why am I showing you this? I want to go back to the generator. I want you to look at this trade direction, long and short. I have told it opposite entry signal, ignore. What this means, if I have bought Euro USD or AUD USD and it has gone up and then it has come down during a correction, it can either choose to add on more trades, or when the market starts falling, not necessarily a reversal, it can also enter short position. So it can have a long and short position for AUD USD. But I have told it opposite entry signal, ignore. If I had told it, let's say, reverse, the number of trades would have increased. By extension, the drawdown would have actually increased. And that's why ultimately robots end up failing. So for simple robots, this is how they work. Very simple. They use instructions you've given them. They go in, they take trades based on these instructions. The more the indicators, the more complex the robot becomes, but not necessarily profitable, the more complex it becomes. So for the algorithms that have been developed by professionals, they follow a strict set of rules. Remember, this one is now not following indicators. This is now following a strict set of rules how a trader would trade, and that's very, very complex. I've not been able to get my hands on an algorithm professionally developed that is used by financial institutions. If I do, I'll do a review and let you know how that works out. But please note, I am building these robots. I will deploy it on a demo account, and within 1 year, I will tell you the results. So next year at a time like this, let's say next year around October, November, I'll tell you the results of this robot that I will deploy. So just stay tuned. We'll see what happens. Now, there's something very interesting. Why robots fail? Recall I told you this simple robot will use the instructions based on indicators. Buy when this thing goes higher, sell when it comes lower. Guys who studied price action, you'll know that prices rise then they come back for a correction. And the correction is not necessarily a change in direction, it's simply a correction to pick more orders. So a robot can enter a buy and a sell of the same currency using maybe the daily data. And ladies and gentlemen, because I'm using daily data here, I am being very conservative. If I deployed, let's say H4, H1, or M30 data, you will see the drawdown increase. Why? There are very many movements within the 1 hour as compared to the daily. Daily is slower compared to the 1 hour, meaning the results you're seeing here, they could be exaggerated when I go to the H1. Maybe the profits would have been above $1,000. Maybe it would have been in loss. I mean, nobody knows anything. Now, why do robots fail? They fail because the person deploying them, number one, does not necessarily understand how trading works. If you go to TikTok, and I know this one will appeal to Kenyans a lot. If you go to TikTok, everybody is trying to sell you a robot that they tell you this one is better than the last one. I told you for a robot, before you buy a robot, check the track record of the trader. If the trader does not have at least 1 year's experience of consistency and profitability, don't bother buying what they're selling. Because a robot should mimic how I trade. It can be better than me. Therefore, if I'm doing 10% per annum, then a robot can do maybe 12 to 13%. So if I don't have a track record, why would you buy what I am selling? And that's why I showed you this expert advisor. Anybody can log on here, throw together some indicators, do a test run, and export it and sell it to you. And I mean anyone, even a person who has no experience trading. I am doing it, and I don't like using robots. I'm simply doing it to show you how easy it is. Number one, so you don't know the track record of the trader, therefore you're not buying a verified product. You're buying a product out of emotions. The second bit why robots fail. Robots will take in rules based on indicators. If you study these indicators, you will discover some of them were developed in the old world, 1930s, 1940s. The world of today cannot resemble the world of 1940, 1950. It can. Even an indicator developed in 1990s will still struggle with the world of today. Prior to 2024, we never saw gold hit the highs that it's hitting. We never saw. Nobody ever knew gold will go to the high of 2,600. Even as we speak, nobody knows if gold will hit 2,000, 3,000. Nobody knows. So early 2024, when it started this year, nobody knew Japanese yen would raise their interest rates, causing a reversal. Nobody knew. So if a robot was using historical data and historical entry and exit rules, then it's hit with news of maybe Japanese yen is recovering because there's increased inflation in Japan and they're raising interest rates. A robot would not know how to respond to such a situation. And if you take time, guys who've used robots, you will see their equity curve keeps growing consistently. Then at some point just drops off because a robot made a decision that you can't explain. Then there's the bit of doing opposite entry, hedging. People call it hedging. And there are different types of hedging where you can enter 0.01 buy. If it drops, you enter another 0.02 buy, where now the extra lot is to take care of the first lot that is in losses. That would be a different type of hedging. Then the other one would be you buy and also sell the same pair. What that happens is if the market moves aggressively in one direction, you are taken out of these other positions, and these other positions are in profit. The only problem is this: if it did not maintain consistency of lot sizes, you will realize it will keep on increasing lot sizes to take care of your losses, and that's how you lose your account. That is why I was very specific with what you're seeing on the screen. Entry lot is 0.01, and I'm using a 500 USD capital. That would mean even if my capital increased to from 500 to 600 to 700, it would never increase the lot sizes from 0.01. It would still maintain 0.01 throughout. The other bit is this. Say I'm a trader and I develop a robot. No, not this one. A very simple one, not this simple one, sorry. I develop a robot where we come together with a programmer and maybe some other profession, and we develop a robot. I want you to know that my main profession is trading. It's not developing robots. And for me to keep this robot updated, I have to consistently find updates for it. And what do I mean updates? I have to consistently, sorry for that, I have to consistently improve how it's viewing the market so that it can view the market the way I view the market. I don't know whether you've noticed every time you use your PC, or those guys who are using Windows, when Microsoft releases an update, it's not 1 MB or 2, it's like really, really large. And they have to consistently release these updates to keep their software up to date. Now, you have to do the same to keep your robot, the algo robot you developed, up to date. How many traders do you know who will take their time and say, I'm not going to trade anymore. What I'm going to do is to dedicate my time to developing this robot, teaching it and improving it. How many traders do you know who can do that? By extension, how many traders do you know who have that much money and that much time to keep throwing at a robot to consistently develop it, improve it, develop it, improve it, to make you good, to actually help you get that edge? I don't know how many traders. If you go to YouTube, and I encourage you to go to YouTube, you'll find guys who have reviewed robots. They've even purchased using their own money. They've purchased a robot here and there, and they'll tell you. Eventually, they'll tell you it's not worth it. Why? Guys who've reviewed robots before will tell you one thing, or rather, they have seem to have a consensus that 95 to 99% of robots out there are scams. Number one, they are developed by somebody who has no trading experience. They say they do, but you cannot verify the trading experience they have. And they're simply developing this to make business, just to do business, just to sell you something and they'll make money out of you. And you've seen how easy it is for you to develop a robot using Expert Advisor. I can develop that robot and then I can quote the profitability. Like what we saw before, it is doing $900 in a span of, let's say, 16 years. I can market it anyhow. I'd say it has 90% strike rate. You don't need much capital. I'll tell you a lot of things to convince you why you need to buy this. But what I don't tell you are the intricacies and how this robot works. I'll give you a very good example if you'll allow me. If I look at this robot I have just developed, and ladies and gentlemen, I just want to show you, these are the indicators I have used, only 3. So I can use all these I can throw in all these indicators. But what I want to show you is that I have limited this robot to 60 trades, a maximum of 60 trades. So the results you're seeing today is because of the maximum 60 trades. But if I open this to even 100 or 100,000 or you name it, the only reason I'm opening it up to as many trades as possible is the illusion that more trades equals more money. That's not necessarily true. So when they say they are scams, this is exactly what they mean. The person who is selling you this robot will not tell you the key parameters or the metrics they used to come up with this robot. They'll simply tell you it's proprietary software and you can't ask such questions. Why don't you just come and develop one for yourself? The other bit why they are a scam, and this is the main reason why I don't like using robots. I have been a strategy provider with HFM for a while now. And since 2022, and from 2022 to date, I have seen guys who've come on board to do strategy provision as a copy traders. And they use robots, but they don't tell you they use robots. And for those of you in Kenya, you might actually go ahead and verify this information. So there's one trader who was a strategy provider, and they started the account with 10,000 USD. That's approximately 1 point something million Kenya shillings, depending on when you watch this video. And they used the robot up to a point. The robot blew their account. But for 6 months or so, and I'm being modest, their equity curve was always improving. Hence the justification why you need a trading robot, because if you look at my equity curve across multiple brokers, it's not necessarily going up all the time, it comes down. Now the robot blew the account, and I want you to ask yourself this question. If you bought a robot and it moved your account from $500 to $1,000 and then it blew your account, who would you blame? Would you blame the robot or yourself? Forget who you'd blame. Who would carry the emotional and financial burden? A robot or yourself? So it's yourself. You'd carry the emotional baggage and burden. Suppose you're the one who traded from 500 to 1,000 and lost the money. Who would bear the burden if you lost all that money? Yourself. What's the point of buying something that when it fails, you bear the burden, as opposed to learning the same craft such that when you fail, you bear the burden but you learn? What's the point? And that's the reason why I don't advocate for robots. If you have a robot that is beating my return, well and good, but I tell you one day, a robot will fail you because of the rules crafted within that robot that you seem not to know. And I want you to take time. Anybody who is selling you a robot, ask them all these questions. How many maximum trades? What are the lot sizes? What is the time frame it's using? Is it using daily time frame? Is it using M5, M15, M30? Is it using weekly? Ladies and gentlemen, ask all these questions because I've come to learn. The higher the time frame, the higher the success. I used to operate on H4 and H1, and I would take maybe 60 trades in a year. And I thought I thought I was conservative back then. Today, I use the daily time frame and I don't even do 30 trades in a year. Why? I have learned less is more in Forex. So I'd rather not purchase a robot that will promise me a 99% hit rate that will trade 24 hours a day, 5 days a week. I mean, there's you will not get opportunities every minute of every trading day. You will not. It will be a fallacy to assume a robot will do the same for you. However, you could try for yourself. Like I said, I'm building this robot. I'm not necessarily building, I'm just throwing it in indicators. I'll test it and I will launch it and I will tell you the results 1 year or maybe 6 months from now. Please come to Expert Advisor. Try it out. It's very simple how to export these, how to load it on your MT4, MT5, how to use it. It's very simple. You don't have to pay a lot of money to buy things you don't understand. You could actually test it out for yourself. Ladies and gentlemen, do subscribe to my channel, do like this content, save this content, share this content widely. For now, I bid you adieu.